Yeah. So when I was
Sorry, Mick, we seem to have lost your audio there.
Can you hear me now?
Hear you now, Mick. Yeah, perfect.
Great start. I do this whole technology thing. I'm not so sure about it. All right, so I can do my screen share. I have that up. It's fine. Cancel that. Let me just minimize this. So Damien and Aidan approached me about, talking about data and giving kind of an introduction to data, because a lot of people have been kind of asking about it. So the first thing I should probably say at the outset is everything in this talk is pretty much my opinion and my opinion alone. Most of them are fairly uncontroversial. There's a couple of them that are a bit more, let's just say it's a topic of debate amongst a bunch of kind of friends of mine. The simplicity one in particular, not everyone would necessarily agree with me on, and that's fine. But these are the opinions you're going to hear because I'm the one here and they're not. But the overall idea is I don't really want to give. I mean, I'm certainly Han. I'm not sure if this has been mentioned yet, but I'm more than open to kind of. We've got 8 weeks, which is 8 hours, well 45 minutes. We've got enough time to certainly explore a few different things in a reasonable amount of detail. And I have like this rough outline that you've seen on the PDF is more for illustration and a rough outline to start somewhere, but I'm not wedded to this program at all. I kind of said at the outset what I was going to do was I kind of prepared this week and most of next week with a bit of polishing on the virtues of simplicity. But after that, I'm more than happy to change or move around or talk about other topics in general. And as far as I'm concerned, that will be largely led by feedback from everyone who attends. So, and that could even be something to where I give some weird random throwaway comment explaining something or talking about something, and if that we could turn that into a full topic a little bit later in the course. I'm more than open to those kind of ideas. The other thing I would like to do now, I'm very conscious there's quite a few people on the call, so that sometimes impairs the ability to do that, but I'm more than happy to I don't really want to stand here and give a lecture for 45 minutes if people would rather it be a lot more interactive. So I am more than happy to be interrupted for you guys to ask questions. I have 2 screens here. Damien and Aidan are kind of have agreed kindly to monitor kind of the chat. So if you have any questions or there's something I'm not explaining particularly well, or something you'd like me to go into more detail, please put requests into the chat. Someone can relay them to me if I don't spot them. But like I said, I'd much rather this be a bit more freeform and interactive than me just talking at everyone for 8 weeks and not necessarily getting as much out of it. Whereas if we could have a bit of a discussion. So I'm more than, like I said, my schedule is very, very flexible. Absent of anything else, I'll probably pretty much stick with that depending on how things go. But if there's something in particular that I haven't covered there, or there's something that you'd really like to learn a bit more about, I'm certainly more than happy to field those requests and see how we can fit them in. But failing on that, we may as well get started. So let me just bring up the slides. Just to let everyone know, these slides are in HTML and they're available on the web. So that's the URL. You don't need to write it down or anything. I will paste it into the chat towards the end. They should be available pretty much as is, because these are the ones I'm rendering. It uses a system called Reveal. Now, having said that, I'm not sure how useful the slides will be. absent of me giving a talk about them, because I very much try to use them as visual aids and kind of to illustrate. There's lots of pictures. There's one slide with a lot of words on it, and that was only added about an hour ago because I realized actually I should probably talk about that, and it's worth giving the full quote. But other than that, I'm not sure how useful they will be. Maybe the recordings will be more useful. I'm not sure, but yeah, I'm happy. And also, I have mentioned to Damien and to Aidan, and there's a couple of other people here who I know. By all means, if you want to ask me a question, please do so, and don't be shy about interrupting me or cutting across me or anything like that. I'd much rather have that. It sometimes can be quite taxing to just talk at a black screen for an hour. So yeah, I'm more than happy to do it. Okay, so we may as well get started. So today the idea of today is to just give an overall feel for who I am and what the kinds of things I'm going to be talking about. I'm not going to get very technical, and hopefully, I mean, depending on the audience and what you guys ask, I'm not necessarily going to get too overly technical at any point in this 8 weeks, because to be quite honest, there's loads of other things out there that are way better at explaining that stuff than I am. And what I do feel is often not very well covered is the softer side of all of this, kind of the human element, the where do I start, the 400,000 feet view of the overall thing, that often isn't discussed particularly well by people like me, because we have a tendency to be techno-utopians who just love technology, and therefore we get all excited about all the things that we can do, and whether or not it's practical, or whether or not it's actually worth it, or whether or not it's just tech for tech's sake. So I think that's something I would rather address, because I think that's a more fruitful, use of everyone's time. So before I begin, I'm just going to talk briefly. I didn't quite recognize that guy. I'm not sure who wrote that bio for me. It wasn't actually me, because mine was 2 or 3 sentences long. Although the one thing I will totally agree with is that I have proven to make statistically bad tea. We can talk about that at some other time. That was quite a that was a dark moment in my life. But I like my tea, so that's fair enough. But none of my friends do. So I'm a former quant, as I said. I kind of was in college. I did physics as a background, up to kind of postgrad, and then I realized after a while that I kind of lost sight of what the hell it was I was doing. Certainly when you get to kind of graduate level physics, it tends to be very, very, unless you're kind of on the experimental side, and I was much more on the mathematical and theoretical side, it gets very, very into the weeds, and I kind of lost sight of the wood for the trees, as the old phrase goes. So I kind of lost interest in physics. I still, every so often, I kind of rekindle the old flame and look at some stuff that's kind of cool. But I had always kind of been interested in finance, and some of the problems there seemed quite hard and quite interesting. So I kind of got into that for a while. Again, statistically making bad tea, it's showing that my timing is pretty awful. I picked I did 3 main activities in my quant career, which I'm happy to tell anyone over a pint, and it turned out to be the 3 worst periods to get into the activity that I was getting into. So that was quite a humbling experience. But as part of that, whole experience, I had been essentially, I was the only guy in Europe. The kind of the way everything had gone, it was kind of North American focused, and everyone else who originally had been here had kind of moved back. And we had the internet at the time, so kind of I was one of the first kind of remote workers on that kind of stuff, because it didn't really affect anything. But what I was very, very conscious of as the guy doing the modeling is that I was the only one there. And the one thing I'm very, very conscious of is being wrong, because especially when the stakes are very high, which is kind of the case in insurance, certainly in the more kind of traditional, pricing and risk management and exposure type sides of things. And trading is exactly the same. It's a great way to lose a lot of money very, very quickly. So I was very worried about my modeling being wrong, and I had no one really to talk to, because everyone else was kind of abroad, and they were all in North America, and they weren't really technical. They were more on the trading and operations. So there was meetup groups that were starting around the time of kind of 2011, 2012. So I got involved in a couple of the kind of technical stats kind of programming meetups, and I ended up helping run Dublin OR. And OR is kind of you may have heard of it. It's the kind of the statistical programming language. It's kind of R and Python are the 2 main languages in data science. Python probably much more so than R these days, It's really kind of overtaken it. But I got involved in that, and I met a bunch of people, and they started telling me about insurance, and I was kind of getting sick of the quant things because it was kind of going nowhere. A lot of insurance sounded quite interesting, and I'd looked at insurance before because there was quite a few kind of derivative stuff took some insurance principles. So I got involved in insurance, and I found insurance was absolutely fascinating and also incredibly backwards in terms of technology adoption. Now, it's much less so than it used to be, but I'm talking about 2014 when I first discovered it. And, you know, there are certain pockets that are reasonably cutting edge, but the vast majority of the insurance stuff that I work on, particularly in specialty risks, is still, you know, they do things off a spreadsheet still, and they don't really track their quotes. And, you know, they tell you themselves they'd like to be a lot more kind of data focused and use it better, but, you know, they're dealing with inefficient systems, and, you know, a lot of the stuff just aren't necessarily fit for purpose. And there's a problem because insurance tends to be a long tail line where, you know, it takes a long time to realize things, but careers are short. And I've heard, you know, multiple stories where someone was coming in with a great idea to kind of improve their efficiency, but it was a 5-year timeline. And basically the CEO or the CUO or the CRO, whoever the kind of the head honcho in charge of the budget was, went, you know, well, that's basically my retirement period, and we're not really rocking the boat between now and then. And that's happened, you know, that happens all the time. And it's a very human element, which is something I definitely want to talk about today, is kind of the human political kind of cultural element of it. I tend to be the nerd in the room. For those of you, this is great because this started me being kind of, when I first made this reference, the IT crowd was much more recent. So most people knew who Maurice Moss was. Although I have given this talk a few times to like young undergraduates and stuff like that, and they have no idea who this character is. So, which is kind of just illustrating the point, I guess, that I really am a nerd. But I do tend to be the Maurice Moss of any room full of nerds. The one thing I will say is that I've never had to role play buying sandwiches. But other than that, I pretty much fit all those criteria. So I do tend to be the one doing the nerdy stuff, even amongst all the nerds, as you'll probably learn pretty quickly. So like I said, yeah, I'm basically the big nerd in the room. I'm the one that even the nerds and the geeks think, wow, that guy's really nerdy. So we can get on to the main thing, because enough about me. So I want to kind of, rather than talk about kind of the overall course and stuff, because like I said, I very deliberately set that up to be somewhat flexible. And by all means, Damien or Aidan or whoever, keep an eye on the chat. If you guys have any questions, feel free to jump in and kind of cut across me. I'm more than happy to kind of field questions or explain myself, or even go back to something if I've, you know, cut across an idea too quickly. But I guess what I'm trying to talk about today is just to give an overall idea of kind of this is going to sound very grandiose and somewhat conceited, but it's kind of the overall philosophy of the concepts I'm trying to portray here, because I think they're incredibly important. And I can see I can often see projects that are going to fail at the outset, and, you know, no forecasting is 100%, but I'm definitely hitting above average in things of, yeah, I can pretty much see what's going to go wrong there. If you're not careful, and then you get ignored, and then it goes wrong in exactly the way you said. But of course, you never get the credit for that, because, you know, who wants to hear "I told you so"? Because I know I certainly don't. But the basic idea I want to talk about is from the film The Big Short. For those of you who have seen it, it's based on a Michael Lewis book about the property market crash, and the whole concept of it was that, you know, no one could see it coming. And that was the common refrain, like no one really expected a property crash because, you know, property had always gone up. And the point he was making was that that wasn't true, that as long as you were willing to be kind of laughed at for a while and to kick conventional wisdom, you could see it coming. There was actually very, very clear and open signs. And they kind of use, and the reason why I'm bringing this reference in is a lot of them used like data. They didn't even necessarily use particularly sophisticated quantitative techniques. One guy, Michael Burry, played by blanking on his name, the guy on the left, Damien, what's his name, the actor? Can you think of it? And Steve Carell and
Christian Bale, is it?
Christian Bale, thank you. Yes, the guy played by Christian Bale is a guy called Dr. Michael Burry, and he did something that no one else did in looking at. He just looked at what was in all these mortgage-backed securities, because they were available for anyone to look at on Bloomberg. And there's one great screenshot of him like downloading spreadsheets and looking at. So he didn't do anything particularly sophisticated in terms of, you know, quantitative techniques or anything. He just looked at the data. But I don't really want to talk about that there, but there's a great quote which I think is very true about some of the key concepts I'm talking about, and you can kind of substitute it in. And this is the closest thing I'm ever going to get to profanity, I hope. But you kind of need the profanity in here to really emphasize the thing. And it's the truth is like poetry, and most people hate poetry. Like they really, you know, and that to me is very true. But you know, most people don't like the truth. They say they do, but when they actually get it, you know, they get offended. So they say, you know, tell me the truth. You know, the classic one for all of us who are married. Does this dress make me look fat? No. No, it doesn't. Or find a reason to have to go to the toilet right now if you're pressed for an answer. You know, most people just don't like it because it's usually ugly, and it's, you know, it's not necessarily what we want to hear. We want to hear things that make us feel good. And the things I'm also going to talk about, you could exactly change truth for the words change and the words uncertainty. So people hate change. They always say they want to embrace change, and they do it. In my experience, most people embrace change, kicking, screaming, fighting tooth and nail, and they don't want to do it until it's either forced upon them or they have no other choice. And generally, they're generally one and the same thing when it's forced upon them because they have no other choice. But another kind of lesser known example of that is uncertainty. And psychologically, humans do not like uncertainty. And the reason why I'm saying all of these and why I'm talking about these is that typically data awareness and data related projects embrace change, because you've got to change what you're doing. They generally require embracing uncertainty because they usually require some form of statistical techniques, you know, that map out the future, because almost all forecasts are probabilistic in nature. You're not saying that, you know, if you predict 100 customers with a propensity to buy, you're not saying that all 100 are going to buy. What you're saying is that I expect 60% of the people that we contact will buy from this list of 100. You know, those are statistical and principles of uncertainty. So because we're dealing with uncertainty, we kind of have to have the tools for dealing with that. And that's typically why we do data related stuff. It's very, very rare. Like there was a time when data didn't necessarily mean that, but those issues were kind of solved by databases 20 or 30 years ago. And the advent, you know, pretty much every organization these days, one way or another, is backed by a SQL database. And those are the things, you know, so the whole data related stuff these days, when you're talking about, you know, data awareness and data driven decision making and all that kind of stuff, it's also an uncertainty issue. And I mean, I think this, like the whole issue of uncertainty from both like a philosophical and psychological point of view, is a fascinating topic, and we'll probably dedicate at least one lecture, like one of the series, to that. But the main thing I kind of want to point from all of this is that people just don't like it. People just do not like uncertainty. It's kind of a well-known psychological experiments that people will take like something that's blatantly untrue, but is expressed with a high level of certainty. There is a much stronger propensity to believe that than someone who's a bit more kind of cautious and saying, well, you know, but in many cases, the second opinion is the much more intellectually honest one. But people just don't like it. And dealing with that is a very important part of, you know, quote, data awareness. So that's kind of something I want to, we'll address as well. So there's three main ideas that, kind of three concepts that I'm going to mention into this. And like I said, there's the concept of uncertainty and around it. There's also simplicity and how, you know, how do we actually deal with, you know, how do we deal with it? And to me, I always much prefer the, you know, the principle of Occam's razor, although that's not quite what I mean here, but generally I prefer to take a simple approach, certainly first, and I will exhaust the simple approach before I move on to something more complex. And the one thing to talk about there, and I'll talk about that a bit more in a few more minutes, is it's very easy to confuse simplicity and complexity with easiness and difficultiness. And they are two separate things. Most people, when they hear simple, they also think easy. And that is not true. So a good example of it, I am very, very overweight. It's a very simple thing for me to lose weight. I just need to eat less. That is not an easy thing for me to do, or I would have done it already. You know, it's easy to quit smoking. You just stop smoking. Similarly, if you have alcohol problems, you just stop drinking, right? Those are never easy things. So by simple, I don't mean easy. I just mean simple, as in not complex. And there's a whole load of benefits to that. And I do want to talk about that a lot later. And like all of next week's masterclass will be dedicated to just the virtues of simplicity and doing the simple things well. And I'll talk about that a little bit in a few minutes. But yeah, those are the things. And then the final thing, which is probably the most important topic, because it kind of dictates everything else, is the culture and your company culture. So I'm kind of taking the focus here that everyone who's attending today has, you know, is doing it from the basis of the organization that they're currently working for or allied with or representing the interests of. Doing these things successfully require the right culture. And if you don't have the right culture, it's arguable that you should bother even trying at all, because if you don't have the right culture, you certainly won't get the return on investment that you would be hoping for, because even if you do manage to succeed, I think you're kind of tilting the table against yourself, because a lot of these things are kind of the harsh realities of this type of work. And if you don't kind of if your culture isn't capable of kind of recognizing those realities and also accepting the limitations of what can and cannot be achieved, then you're kind of on a path to disappointment and, you know, and what can go. So that's kind of the three things I roughly want to talk about. I'm going to kind of address each one. How are we doing for time? We've got half an hour. Okay, I've got about 20 minutes. And like I said, my aim is to finish up around 15:15 to allow for any questions. But having said that as well, I'm also more than happy to take it as I'm talking about. And if anyone wants to challenge what I'm saying, my idea is that I'm not Moses coming down from Mount Sinai with the 10 Commandments of data written on some tablets. These are the lessons I have learned from my career, but I will be the first person to admit that I have had something of a idiosyncratic career, and other people may strongly disagree with me, and some of my best friends strongly disagree on certain things of this. So I'm more than willing to have that debate, but I'm certainly just going to at least present my opinions, and then we're happy to talk about it. So when most people think about uncertainty, there's a bunch of different ways people think about it. So one, this is I tend to use a lot of pop culture references and films and TV shows and stuff. I'm not going to apologize for that, but it's kind of like poker, right? This is the movie Rounders with Matt Damon and Ed Norton and John Turturro and a couple of others. They kind of often think in terms of gambling, right? And that was actually the first kind of forays by kind of science into probability was largely done in France, weirdly enough, during essentially the 17th century, when French noblemen were gambling a lot and playing cards and dice, the 17th and 18th century. And they were basically trying to figure out how to gamble better. And they knew, there was a big thing towards mathematics in the late 1700s. So they had, some of these noblemen had very, very clever friends, and they basically asked them to help them win at cards. And that kind of got turned into then that, they actually created some of the academies that then got turned by Napoleon, for example. Some of these concepts were then used to improve their artillery pieces. And part of the reason why Napoleon conquered most of Europe in the late 1700s, early 1800s was because of his military genius. And part of that was by a guy called Blaise Pascal, who kind of figured out how to use these kind of statistical techniques to aim artillery better. And that was, I'm not saying it was the only thing, but it was a very important component of his kind of military dominance. So there was, but the reason why I'm mentioning that is only a very kind of narrow and somewhat idealized view of uncertainty, because when we're dealing with poker, we can actually calculate odds. We can calculate them exactly because we know what the probabilities are. We know that there's like 52 cards in a deck, and we know that there's one of each rank and 4 suits and so on. So, when we start seeing cards get turned over, and similarly with dice games like craps and that other card game is dice game that I can't think of offhand. Those give us, so we kind of think in that sense of uncertainty, or like horse racing, but horse racing is a better idea because we don't necessarily know what the odds are. They're kind of dictated to a certain extent by the market and sports gambling. And in most cases, bookies aren't actually looking to make money off getting the odds right. They're just trying to earn the spread. They're taking bets on one side and on the other, and they're earning the bit in the middle. And that's kind of their logic for applying that. So that's kind of one type of uncertainty. Another type of uncertainty, though, is something where we don't really know the odds at all. We're kind of down the road, and we kind of think of uncertainty this way, whereas like I'm down the road, there's no signposts. I've got a fork in the road. I can go left or right, and I'm trying to get somewhere, and I've no way of knowing. So I'm a little bit in the dark here. And, this would suggest a 50-50 split, but not always so. It might not necessarily be the right thing. You might be turned around. So sometimes people think of uncertainty that way. But kind of the third type is the scary type, where we're kind of completely unknown. It's kind of the fear of the dark, the fear of the unknown. And there's been a lot of talk about and research done into psychological reasons for why people fear the unknown. And some of it's based on evolutionary psychology, which, to be honest, is something of a pseudoscience because it's totally unfalsifiable. So you can make all these things up and they all make sense, but it's just a storytelling. There's no way of saying it's true versus it's false. But we do kind of have this kind of, scary dark cave where we have no idea where we're going. And, to quote the Game of Thrones, that, the night is dark and full of terrors. And we just don't like this type of uncertainty. Why? Where, we want outcomes, even if it means most people, and they've done this with psychological tests, will actually trade expected chance of victory for reducing the uncertainty. So if you give people 2 experiments and you give one with a high range of outcomes, but a higher expected value, then something with a slightly smaller expected value and a much tighter range of outcomes, people will tend to choose the latter over the former, which from a kind of an economics point of view is irrational because they're giving up, on average, people, they would tell you should, quote, should, but people just don't like uncertainty and they discount it heavily. They really they will pay a premium, which is kind of why people buy insurance, right? Even if necessarily for non-catastrophic events where it doesn't necessarily make a lot of sense to insure against an event because it's not going to cost you that much money, but people still buy it, right? Because they don't like that uncertainty and they're willing to pay a premium to get that uncertainty reduced. So we're going to talk about this a lot more, but this is kind of, I definitely want to talk a lot more about kind of the psychology around uncertainty and how to deal with it and what to think about and all that kind of stuff. I want to talk about culture very briefly. Now, unfortunately, most people will be happy to know I didn't get a particularly good image for it. This was kind of the closest I could. So there is this concept of the hippo, which is the highest paid person's opinion. Now, this is an old one from Google. I'm actually not sure if this applies to Google anymore. I think there's a certain amount of PR and hay has been made from the high focus on an engineering mindset and doing things the right way at the big tech companies. I think they're a lot more political and, a lot of the, when with scale comes large organizations, and with large organizations comes politics and, all the other things that happens to every other industry. But I know definitely when they were in their growth phase in the 2000s and stuff like that, it was very much, it was true. Like they were very, very driven by kind of trying to do the right thing and taking what they call an engineering mindset. But yeah, you have this, you have a whole load of options, and then there's, you have, let me just move that away. You have no real choices for option B, but it's the one that, the big boss likes. So that's the one you go with. And to me, there's no amount of data will work there. And I know a lot of people like me have been in the room where they think, but if I just show them these numbers, it'll make a lot of sense. And sometimes it works, but more often than not, it doesn't. And again, it kind of depends on the culture of the company. And, are you willing to accept that, we've got 3 options. Option 1 is, let's not do anything and stick where we are. Option 2 is to change something, and, we've got wheeled in some, slick software vendor or some slick consultants or whatever, and they're telling you that, we can spin straw into gold and it's going to be great and success is guaranteed and all that good stuff. Or you have some other one who is like maybe an internal engineering team or maybe a different consultancy, and they're just going, this is very hard, it's going to be very difficult, and there's a certain amount of uncertain outcomes, but we can tell you this, 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 and this, and here's the reasons why we can't do a better job, and here's the reasons why we think options 1 and 2 are doomed for failure or are not a good way to go. In a lot of places, they will ignore number 3 because 2 is or 1, because 1 involves not spending any money. 2 is kind of slick and everything's nice and people are happy and it all kind of works out. And that just boils down to company culture. And I don't have great answers in terms of how you fix that culture. If you do have a culture like that, or if there are places you've recognized in your past, and the question is, how do we change that? I'm not entirely sure I'll have great answers for you on that one beyond red flags and maybe ways to think differently. But ultimately, these things do tend to come from the ranks of senior management. It's senior management that tends to kind of create the culture. But company culture can be very hard to change because these things evolve over time and they can be quite robust to external people coming in and trying to change it. Organizations do typically have quite a strong immune system to foreign acting culture infections. It's just kind of the way they're built. So that's kind of another important topic. And like I said, I don't really have more slides because that was the best one I could find and everything else just seemed to be a shoehorn. But it is an incredibly important thing that we will discuss more at length. Hold on. And then finally, simplicity, like I said. So, like I said, I make a lot of pop culture references. So this is Maradona's famous goal against England in 1986 World Cup. And this has actually been referenced by the Bank of England a few years ago. So that's my excuse for including it in here. If the governor of the Central Bank of England can talk about it in an economics thing, well, then I can certainly bring it up in a data thing. But when you actually look at what Maradona did on that day, he actually didn't do anything particularly clever, apart from the very big control of the pass. For anyone who's not a soccer fan, my sincerest apologies. Just take what I'm saying here at red. But he didn't actually do anything particularly fancy. He basically spun away with control. That was very good. But the rest of the time, he pretty much ran in a straight line and kind of with a slight curve on it and then put it past. He didn't really do any fancy step overs or hijinks or anything like that. And that was kind of what Maradona was amazing at. And that's kind of where I'm trying to get to with the idea of simplicity. That I've had this old adage that I discovered kind of by taking my lumps in finance, is that quite often basic competency puts you ahead of the curve. So by that, I mean, just doing the simple things well and not screwing the basics up is often better than most people or organizations are capable of achieving. Now, I know that sounds an incredibly damning thing to say, but and again, it's like everything else, I'm speaking in broad sweeping generalizations here, but in general, the really good organizations that I've ever dealt with in various guises, either as service providers or clients or companies I've worked for or whatever, or even vendors to me, both in insurance and finance and in a couple of other industries, the ones that are really good, that have I don't even want to say outstanding customer service, but relatively good relationships with their partners and their customers and their vendors, they're the ones who don't mess up and they just do the basics of whatever it is they're supposed to do in their chain. They just do it well. And that's a great example of that. I didn't put him in here, but I'm a big NFL fan, and the most successful franchise, not necessarily ever, but certainly in recent history, is the New England Patriots. And they have a head coach called Bill Belichick, who's definitely in the discussion as one of the greatest head coaches ever. But his whole mantra is just do your job. He doesn't want people to do anything fancy or to try and, stand out or, try and make a name for themselves or whatever. All he wants you to do is to do your job and don't mess that up, and kind of success follows. And that's kind of the reality of that. And a great example of that is, to bring it a bit closer to home, is Dennis Erwin, who is a really, really outstanding fullback for a soccer player for Ireland and Manchester United. And it's harsh to say this because I'm a Leeds United fan, and so praising Man United even indirectly is hard. But the reason why Dennis Erwin is considered one of the greatest players certainly Ireland ever produced, he's definitely he's probably not in the top 3, but he's definitely in the second one down, is he kind of very consistent. He was Mr. Consistency, is what Alex Ferguson called him. He never did anything flashy at all. He was just consistently solid. And, you know, he stepped up, he was able to contribute in the various ways as he needed to contribute. He never really stood out as the man of the match or as having like a truly outstanding game. He chipped in with his fair share of goals. He took the free kicks, but he never really messed up. He never really made mistakes. And to me, it's the old thing you'll hear in soccer of the great goal scorer versus the scorer of great goals. And to me, expertise and being good at something is just about doing the simple things really well. And there's something somewhat encouraging about that, because not messing up the simple things just requires like attention to detail and paying, you know, and taking, you know, caring about what you're doing and just trying not to screw up, to be honest with you, and just thinking about what you're doing and not being careless. And we can all do that. So there's kind of a message. Now, I'm not saying everyone, if they wanted to be, could be a professional soccer player or the greatest player ever. That's not the point. I'm not saying that. I'm very good evidence of that. But what I'm saying is that to become good at something, obviously practice and all those, you have the whole Malcolm Gladwell thing of the 10,000 hours and all that kind of stuff. But it's more about just paying attention to what you're doing, figuring out what the basics of the job are, and then just doing them very well. And that kind of ties in with the simplicity thing of let's just do the basics. Let's get the basics done. Let's try and do the simplest solution we can to at least start solving whatever problems we have. Let's do something rudimentary. It doesn't have to be perfect. In fact, it shouldn't be perfect, because if it's perfect, you're doing too much. You just want something like it's in startup parlance. They talk about this MVP idea, which, like all good ideas, gets turned into a massive kind of misused term that everyone starts quoting and then suddenly goes on to the bullshit bingo kind of cards that you hear about. But the concept is a very solid one, which is essentially, just do the minimum thing you need to do that you could actually say sort of solves the problem, and ignore the fact that there's all these problems with the model, or there's problems with the system that you've done, or it doesn't work properly. Just get something going. And the reason for that is because it's simple, you can generally do it much cheaper, you can do it much quicker, and you're starting to prove out the concepts, and you can build in all the bells and whistles later. But again, to be able to do that effectively, you have to have a culture that will allow that, which is why I was saying that the culture is so important for all of this kind of stuff. So I'm kind of coming to an end now, which is great because it's pretty much on the times I'd set myself. We do have to ask the question, I've kind of thrown up a whole load of cautionary tales, and, I'm very conscious. I've got people on who are all enthusiastic about, learning all this stuff. And I've got to ask the question of why bother? And I do have an old joke that what happened was there was an old Ronald Reagan, president of the US. He was a very famous Democrat for a long time. He was part of the Democratic Party. And then kind of the Democratic Party went kind of much more liberal in the 60s. It started kind of with them embracing the civil rights, but they kind of went onto a whole bunch of other things as well. So when that kind of split started in the 60s, and he became a Republican, and he ended up becoming the Republican governor for California before he went on his presidential run. And he was asked basically, why did he leave the Democratic Party? Like what? Because he was like a leading luminary, like a very famous guy in the Democratic Party. He was like one of the first celebrities, way before like the Kennedys adopted Frank Sinatra in the 60s. And he said he didn't leave the Democratic Party. The Democratic Party left me. And I sometimes feel that way about data now, is because I've been kind of a proponent of statistics and using data for decision making and all this stuff for ages now. And about 5 years ago, about 2015, 16 maybe, the tide changed, and suddenly a whole load of people started running past me going data, 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 and waving their hands in the air and proclaiming that it was just going to make a fortune for everyone and everything was going to be great and it was going to be brilliant. And I kind of feel like I'm kind of the old grognard in the back going, this data stuff, it's never going to work. But that's not really what I'm trying to say at all. What I'm just trying to say is that there's a certain amount of caution required, and, go in with your eyes open. But I do think it's the way forward, right? Like I said, why bother is a great question. Because essentially we're trying to go back and to get very kind of conceited and high-minded and become a bit pretentious. It's a way of like embracing uncertainty, analyzing data, doing these. It's a way of finding out the truth and finding out what's actually going on in an organization. What is the best plans we have? If we're trying to be intellectually honest, how can we, what decisions do we have to make? Generally under the conditions of a lot of uncertainty, how do we decide the best way to proceed? And the only way really to do that in the modern day is to use the data you have. For one very fundamental reason, that's because most of your competitors are looking at it at the very least. And a lot of them will fail because it's hard, right? And change is very difficult, dealing with uncertainty, changing culture, all these. But it just takes usually one company to, nail it. And suddenly industries change. And, history is littered with all sorts of different industries that have been massively disrupted by either one company coming up with a new innovation and starting to dominate the market, and it's even happened in insurance already. I mean, in the US, I think it's Progressive, focused on personal lines in the US. They focused on very, very solid underwriting, and they went there. I think they have the highest market share now in the US, but it took them 20 years to get there. But their entire focus was on doing, the right things well, focusing on underlying. And I'm sure, like all other organizations, they have their challenges. But I mean, the proof of the pudding is in there. For those interested in insurance, there is a really, really good like management consultant analysis of the insurance industry from 1993, written by McKinsey, I believe, that is still kind of harbored as like not much changes in insurance apart from, the basics of it has been the same for 300 years. But they talk about just getting solid underwriting, getting your data right, figuring out what the markets are, not taking unnecessary risks, handling claims, all that kind of stuff. So one last thing I want to do is quote one like cliche, because I've been trying to bust a lot of cliches. But the one thing I think is a very interesting comment is data is the new oil. Now, data is the oil is a totally overused term now. Like, and everyone talks about it, and it, you just get, it is an eye-rolling moment, and I really hope there's about 20 or 30 of you out there just rolling your eyes without the video cameras turned on. I'm with you if any of you do. But it was a guy called Clive Humby, who was, for those of you who have heard of a firm called Dunn Humby, they're the guys who basically do all the data processing and the data stuff for Tesco. They started out as a consultancy who basically got Tesco as a big client, and they got bought a while ago. So they're now a branch of Tesco. But he said that back in 2005, I think it was, where data is the new oil. And I just to give an example of how these things can get corrupted, there is an old saying that a jack of all trades and a master of none. I'm sure you've all heard of that. But what people don't realize is that old saying is actually the first line of a full saying that actually completely inverts what the common understanding of that phrase is. The full thing is jack of all trades and master of none is oftentimes better than master of one. And I love that quote for a couple of reasons. One, I think it's very true. I think over specialization is a big problem. And I think one of the issues you have in data is a lot of people tend to get very, very narrowly focused. And you're actually better off taking a much wider, broader kind of, again, 40,000 feet view of it. But also, I've always found it interesting how it kind of gets taken backwards. And what people think of jack of all trades and master of none, they're saying that that's a bad thing. And that's the common perception now, it's bad to be a jack of all trades, when the actual full saying was, you're actually better often to be a jack of all trades than to just be a master of one. And the data of the new oil this is the full quote. Its data is the new oil. It's valuable, but if unrefined, it cannot really be used. It has to be changed into gas, plastic, chemicals, etc., to create a valuable entity that drives profitable activity. So data must be broken down and analyzed for it to have value. And that, to me, is actually very, very true. And it's something that people forget, that really data is just a very raw commodity, that before you can turn it into something that we can, before it can be turned into like some kind of fuel that you can put into a jet engine or whatever, there's a very, effortful and, in oil's cases, expensive process with that whole industry around it. I mean, everyone talks about how the oil industry is one of the most profitable industries in the world. And while that's true in terms of raw numbers, in terms of actual profitability, it's usually kind of middle of the road in terms of other large companies. Because I think I remember hearing a quote from one of the CEOs, I think it was Exxon, it was the Rex Tillerson who served under Trump and the thing. He said in the mid 2000s that I think they spend $1 billion a day just operating the company. So that's the point I'm making, that sometimes to get these raw materials, which is data, and we need to then turn them into insights, right? And that can be a time-consuming, expensive, and highly uncertain task to do that. And the insights might not get what you want them to be. So like, for example, your insights might tell you that this really expensive, customer acquisition program that you implemented 5 years ago hasn't basically shifted the needle at all, right? And that could be a problem from the cultural point of view, because that could be a very politically difficult message to sell internally. And I know that has happened to a couple of colleagues of mine who have gone in and they've basically been given the job of prove that my thing is right using data. And then when they find out that it's not right, they basically get in trouble, because that's not what I hired you for. I hired for you for me to provide me with ammunition that my intuition is correct. And when it's categorically proven that it's not correct, that message is often not particularly well received. So that's a quick summary. That's kind of where I got to. The basic summary, if you take anything away today, is that the most important thing about this is getting the culture around data correct and having, a proper thing on it. Like I said, we will talk about this a lot more in the future. But I hope some of you found this at least somewhat enlightening. And please don't call me Dr. Mick, by the way. I meant to say that earlier. Just call me Mick, please. I really hate that, but thank you. But yes, if there is anything you would like me to be focused on, or if there's anything, you can always get me at my email, by the way, between now and then as well. And I always put my stuff on GitHub. That's one thing I will do, because I'm very conscious. What time is it? I've managed to eat up most of the time. I will share now. Like I said, I'm not sure how useful the slides will be, but in case someone's interested, I will just copy and paste them, pop them into the chat. Those are the slides, and I will have basically similar slides from now on in the future. And next week we're just going to discuss a lot more detail about why I am a big fan of simplicity, and I'm in general to the point of complexity, especially around data. Complexity makes me suspicious, and it makes me suspicious for two reasons. One is I'm not sure it's necessary, and it tends to be a more expensive and harder to maintain, and is often more brittle than people like to believe. But the second one is also quite often it's hiding something. Like people who tend, in my experience, and again, like I said, this is controversial because I have a couple of people who would strongly disagree with this, that they don't like simple solutions because they think like anyone can do it, which is very true. Although in my experience, that's not nearly as true as people who are good at this stuff likes to believe. I've got my thing in there. My apologies. Let me just minimize that. And I'm going to talk at length about, the virtues of simplicity, why it's good, like how we think about it, and just give some specific examples. I will probably have a few graphs next week to but it won't necessarily be, it'll be more illustrative of the general point I'm making rather than using graphs to prove my point. And again, when you're talking about visualization, which is a hugely important part of all of this, and we will spend some time discussing, simple is the way to go. I'm generally suspicious of people who haven't exhausted the simple approaches first, because to me, it means either you're focusing far too much on the technology and not on actually solving the problem, or B, it's kind of a way to obfuscate the fact that you don't really know what you're talking about. That's about it.
Sorry, Dr.
Yes.
Gina is my name here. Yeah. No, thanks for all that and the information. And I was listening to everything there, and your underwriters, everything, but compliance. I am come from a background of compliance, and I know fintechs, they love all this, and sometimes, especially with startups, they feel compliance gets in the way. But to keep it simple, and I know that's the best thing. Sometimes it's the hardest thing to do.
It can be incredibly difficult to keep things. I can tell you right now from experience that certainly creating simple visualizations to convey whatever it is you're trying to convey is something that you only get through practice, and I'm still not very, very good at it.
Yeah, no, I agree with you totally there. And sometimes I think the fintechs and data, the regulation is surpassing it, and it's not able to keep up with the regulation and how people want to keep their data and everything. I mean, data is great where it's stored, and I hear you talking about underwriters, and everyone should be at the table. But I think there should be a bigger collaboration in the businesses, like you said, the underwriters, compliance, all the other parts of the business, the IT. I mean, I'm not IT. I love it when it works, and I know what
yeah, exactly.
And
and that's part of the problem with a lot of IT projects is that they get very, very complex.
Yeah.
And again, that means quite often it's very, very hard to one of the reasons. I mean, compliance would be. I've dealt with compliance in the past, and generally I've been
especially
fine.
with culture now, ESG, it's everywhere.
Yeah.
On it. No, that's interesting. No, I wanted to hear your take on compliance at the table with the data.
I would totally agree. I mean, it depends, but generally, if there's a compliance function, it's because it's there by regulatory diktat. You have to have it. So if you're talking about insurance, exactly.
Central bank.
So,
yeah.
A very, very interesting. One of my colleagues and one of the co-organizers of Dublin Data Science was actually part of the EOPA panel on AI. Because they are looking at it now from a compliance and a regulatory point of view. And for me, I mean, it brings in a bunch of issues, but one of the big ones is it's the other bit, and this, I will talk about this a lot more next week, is one of the real benefits of simplicity is that you see when things go wrong.
Yeah.
And they become very, very obvious when things are wrong. And that to me is a huge compliance issue.
Yeah, and it's like the data, where it's stored, and maybe data sharing, leave the data where it is, get the information from it. There's a whole lot of different things coming down. Yeah.
And that, I mean, and like GDPR is really just the start of that kind of thing.
Yeah.
You know, it's certainly not the end.
No, it's growing all the time. Yeah, no, thanks. That's great. Yeah.
No problem. Anyone else?
Yeah, I think if there's no more questions, we'll try and keep everyone to the hour. There's just one question come in there, Mick. Is there any pre-reading suggested for next week?
Is there any pre-reading? Yeah, yes, actually. I'm going to say it in general. I'll try and get the proper link to you later. There's a really good semi-profane article out there called On Bullshit, which is basically which is very good because I'm going to touch on some of those topics. It was written about 15 years ago. It's a short form article. It's not, I think it got turned into a book, but the one I'm thinking of particular is maybe a 10 or 15 minute read. And the guy who authored it died very recently. He only died in the last few months. But that is a really interesting talk because the whole point he's saying is it's not about truth or lies. When you're dealing with what he's calling bullshit, it's basically you're ascribing no value whatsoever to the truth. You're just saying whatever is in your head, and you don't really care about whether it's true or not. So he was saying that it's quite a pernicious thing, and I will touch on some of those topics over the next few weeks. The great thing about simplicity, it's a great way of calling it out because it's very, very hard to hide. The problem with complexity is it can make a lot of things hide in it. It's one of the reasons why a lot of kind of over-the-counter financial transactions can often be very complex, because it generally suits the people who are structuring the deals because they can hide all the complex stuff, and that's how they make their money, because it's essentially an information asymmetry. It's much harder to do that when things are very, very simple. So that's another kind of thing to think about. But other than that, I'll get the link to you, Damien. I'll try and find it this afternoon.
That's brilliant. Thanks very much for that, Mick. Really looking forward to it next week. I think lots more people are as well. It'd be great, like you're saying, to see, there's a whole architecture in the background to make things simple. That's complex, but getting the view to people in a simple format is the key there, really. But thanks very much, everyone, for your time. Same time next week, 12:30 to 1:30. If anyone has any problems accessing through the links or getting into the classroom, just let me know. But we'll look forward to seeing you all next week. Thanks very much.
Thank you.
Thanks, Mick. Thanks, Damien.
Cheers. Thanks, boss. Bye.
Bye-bye.
Guys.